everybody. Welcome to the Trading Market Technicals Morning Call video for Friday, September the 20th. Well, we did get that pullback that we were anticipating yesterday, and that was from our little trusty McClellan oscillator. We were in the overbought state, and we were up at the Bollinger Bands, and we did get a small little pullback, but really, believe it or not, the pullback is bullish. We really didn't go anywhere other than the Dow Jones selling off about 40. Actually, NASDAQ was up 5, and the S&P down 3, Russell down $1.70, so relatively flat. Dow was the worst as far as any type of selling was concerned. So we did get the little pullback, but the pullback is bullish. So what are we to expect today? Well, today is quadruple witching, and generally when we do have options expiration on a Friday, pending any bad news, the market will generally maybe take a small dip lower on the opening and then pretty much drift back higher again into the close and look for the bigger stocks to be pinned at the whole numbers. So that's what I'm looking for today. I don't expect any action other than a slow grind higher, unless, again, of course, something comes out of the UK or Syria. But other than that, I wouldn't expect much to happen today. Unless you're playing some options, and then you'd probably be relatively busy. But what am I looking for here for next week? Well, we do see momentum lacking a little bit, right? We did hit some key targets of 1720. Next area to the upside would be around 1748, 1750, and that's really a Fibonacci extension. So can we get there? Sure, absolutely. Nothing is, I wouldn't deny it at all, especially this type of market. However, we have been up for now almost 3 weeks. I'll show that in the chart segment. I just want to run into just a couple of small things, showing you some golds, the VIX and everything, and I'll get right into that with the VIX. Now, the VIX is down here, getting close to the Bollinger Band, but we didn't close outside that band yet. So I'm thinking if we can push up a little bit today, and we break down a little bit in the VIX, getting outside of that band, and then on Monday, if we do start to sell off a little bit, or Tuesday we close back in the band, that'll produce a buy signal for the VIX, a sell signal for equity. So that's what I'm watching. I think today's really not really the day to be doing much of anything. Yesterday was really a snoozer. If we caught some opportunity, and there's opportunity every day. There's opportunity out there every day in the markets. It's just that if it's running through your screens, right, there's so many stocks to look at, sometimes you just miss a lot of it, especially when the market is relatively quiet, just kind of consolidating. And that's what the market did yesterday. Okay, so the VIX, we're looking for a little bit more push lower, and then let's see what happens if we get a buy signal in VIX, which would be a sell signal in equities. Now, the world markets here are doing unbelievable, as you can see, thanks to the help of the Fed, really extending its dovish talks, not actually doing anything with its asset purchase program. And I think the Fed's going to, at its next meeting in December, they're going to end up having to do something. I mean, it's just insane. They're just creating another big asset bubble. But again, that's just my opinion. It means absolutely nothing in trading. So just keep this in mind. We are moving higher. All the world markets are moving high. We broke out of this double top here, so it's all good. I mean, the weekly charts look great. Monthly chart looks great. I'll do that in the next segment on Monday. So it's, I'd be looking for continued strength, but I would be looking to buy pullbacks until it doesn't work anymore. And that's really what it comes down to, guys. We don't want to be fighting it. We don't want to be looking to short the market. It's just not really, it's not worth it, especially in this type of environment when you have this manipulated environment with the Fed pumping liquidity into the market just about almost every day. Okay, let's take a look at gold now. Now, gold could be a game changer with the Fed not reducing its asset purchase program. So that would put a bid into gold. But do you think gold is a possible short still? And that's what I've been asked the question. And I don't know yet. I still like it short, but I like it short at these levels. And I want to show you this right up in here. I like it to retest this area. Now, obviously, we had a pause from the big day, big move up. We're up like $54 in gold a couple days ago. But we had this little pause. We're still underneath the 20, above the 50, and we're below the 200. So if we can get into this 1425 or underneath this 200-day moving average and see where we go from there. If we fail, yes, I would look to short gold. If we break right through it, then obviously gold is now has changed direction here, and it's changed its trend. So right now, remember, gold in the longer term picture is still bearish, but on a shorter term, I'm looking to short gold at a spot around 1460, 1425. That would be the first part, and then obviously underneath the 200-day moving average, if it could get up there, and we'll take a look at that. Now, I would not be short in gold here. Why? Look at palladium, our leader. We had this little sideways consolidation, little sideways channel, and now all of a sudden palladium exploded to the upside. Remember, this is really our leader here, not gold. If palladium continues to run up, gold's going to catch a big bid. So I'm not looking to buy gold yet. That's just not me. I'd rather buy gold at a deeper downside correction and start accumulating gold down there around 1,000 to 1170. It might not even get there, but that's somewhere I'm looking for. So gold is really still has to prove itself that I'm going to be looking to buy gold. Again, I'm a better short seller around 1460, excuse me, to 1425. That's the first target, and then of course the underneath the 200-day moving average. But if palladium keeps moving, I'm not looking to short gold at all. So this is why. All right, now let's get into the chart segment here. And here is the GLD. I like to still short the GLD, and that's how I'll short gold via the GLD right around the 139, 140 area. Which would be right in this consolidation area right here, the supply area, right up in here. So we'll see. I mean, this was definitely real buying. You can see a big volume. I do like it, but I like it short up in this area here. So we'll just, again, take it one step at a time because price gets there. We need now a trigger, right? We need a rollover, reversal candle, take it out to previous day's lows, and we want to see those moving averages roll over as well. And here is USO. I'm not liking the USO here. We really didn't. We busted out, but we're still within this area here, and which is that, as you can see, way back where is this little area, this gap area. So we're stuck in this gap area. And again, I like oil here. I like it down here at 36, 36 and a half. I'd like to see oil come back in this area here. I would not be long oil here. I would not looking to get long. I would not be looking to buy oil. It's going to need another catalyst or heated up talks again with Syria. That would be really a game changer again. But remember, guys, this is where I'm looking to buy gold right up. Oil right up in this area here, 36 to even 37 area, and then you have well-defined risk. Your stops would be just below this consolidation area here. Okay, S&P 500 cash. We have this uptrend channel. This lower trend line is from the November 2012 lows. We're back in it now. As you can see here, we literally have been up for about 3 weeks in a row with maybe 1 or 2 small pause days. So not looking to really get too excited about the S&P. I think S&P is losing a little bit of momentum. Can we move higher? Absolutely. But I would not be looking to chase anything here. If anything, what I'm looking for in day trading, quality stocks that have drifted lower on low volume. I'm looking to buy pullbacks or anything with a catalyst during the course of the trading day within the trend of the market of that day. And that's how my risk will be well defined. And if I don't find anything, I take a step back and we look for trades going into the next day. Here is the spiders. Spiders, same thing as you can see here. Here we're back in this area, and we had this channel, and we're back in it again. So again, we're a little bit overbought in stochastics, and again, we're getting to be overbought here in the MACD. So a little pullback would be healthy to 169 actually, and still be bullish. But I mean, you had this move up for the last 2.5 to 3 weeks. Again, if you're long, tighten up stops, but I wouldn't be adding to any long positions here at all. Here's the 30-minute chart. Now we have the Bollinger Bands actually pinching again. If you see, this is what's been happening here, right? Now show it to you 50-minute. 3, 4, 5 days consolidation. Boom, a gap up. 2-day consolidation. Boom, a gap up. 3-day consolidation. Boom, a gap up. So it's been really tough for the day trader because we just gap up and we consolidate and we gap up again. So obviously the position trade, the long-term trading is doing quite well. And if you see here, we are pinching now. So we want to look for another bigger move. Again, it doesn't tell you which direction. It just tells you that energy is building and look for a bigger breakout, either up and or down. Unfortunately, it doesn't tell you what direction. But if the trend is up, I'd be looking for one more push up here. And again, here's the 50-minute chart just showing you consolidation, gap up, consolidation, gap up. Now we're consolidating again, so looking for another move to the upside. That would be my, obviously, target would be for an upside. Since we are trending higher, there's no reason why we couldn't break higher. Okay, now here is the diamonds. Again, guys, same thing here. This is the two trend lines from November 2012 lows. Nice big move up, inside day from the previous day. This is bullish. There's nothing wrong with this chart. Even if we came back down to this area here, to this gap area, this still would be bullish. As a matter of fact, I would suspect that buyers of dips would come in and start looking to buy the Dow again. Here is the IWMs. Nothing wrong with it at all. Inside day, holding the upper end of the range from the previous day. So, nothing wrong with that. Again, our momentum indicators are showing signs of peaking. So, we really don't want to be looking to buy the market up at these areas. Here's the transports. Our leader doing well. Actually took out Thursday's high, Wednesday's high. So, doing quite well here. Again, a bit stretched though. I mean, you can see. But we did have volume come in. And volume confirms price. And Goldman Sachs doing quite well, hanging at the upper end of the range. Now, and I'll be looking. I'll tell you, if the markets can pull back a little bit and give us a little bit of a correction, there's no reason why you can't accumulate some good bank stocks too as well. Here we go with the XLF again, holding an inside day, upper end of the range. Relatively quiet pullback, so to me that is again bullish. And here's Apple. Apple retraced from the high to the low here, 50%. We're underneath this big cluster area of supply, so Apple's going to need to prove itself to get back above it, or Apple will probably sell off one more time. And if it breaks this low here, make some sort of a low right around the 400, 420-ish area. We'll see if that does happen. And then if it can make a higher low off this major low, this double bottom, and if it can revert, start to move back higher, that would be really your buy-in for a longer-term picture. Now, if Apple can at least hold this area here, I'd still look to buy this for a swing trade with your stops, obviously, somewhere below this area here, this pivotal low. Okay, so Apple I'm watching for next week. Right now, Apple is a big option stock. Remember that, guys, if you're trading it. So, you know, they look to pin it in certain areas. So you got to really, Apple today, whatever type of trading it is, I would just kind of, ignore and then look for Apple trading for next week. But again, 50% retracement off of this area here. Let's see what it does in the next coming days. And, of course, lastly is the Qs. All right, guys, have a great weekend. Enjoy the weekend. Get some relaxation here. And let's see what happens today. Today might be interesting, but I do not expect anything other than maybe a small pullback in the morning and then a slow grind higher into the close. Have a great day. We'll speak to you on Monday. Take care.